Hello everyone. So last class we discussed the concept of forfeiture, reissue of these forfeited shares, and how exactly do we calculate the amount which we are supposed to transfer it to capital reserve. Okay. So when it comes to forfeiture, the entry is very simple. Okay. So first thing is check upon whether the shares were originally issued at par or premium. If the shares were originally issued at par, at that point of time the entry would be what? Share capital account debit to the extent of called up value, to share forfeited account to the extent of whatever is the amount which has already been received, to share allotment or to share first and final call to the extent of amount which is yet to be received. Now in few cases the amount which is yet to be received would have been transferred to calls in arrears. Okay, at that point of time the entry would slightly change. Share capital account debit to the extent of called up value, to share forfeited account to calls in arrears. Okay, this would be the entry, to calls in arrears. Now after this, what the company will be doing with these forfeited shares? Okay, the company is going to reissue these shares. Okay, so the company may either reissue it at little lesser price or even higher price. Remember the minimum reissue price. The minimum reissue price would be what? The price which was not collected by the company at the time of original issue. Okay, so at the time of original issue, whatever money was not collected by the company, that is the price at which the company will be reissuing these shares. Okay. Now, when the company is reissuing these particular shares, whatever is the discount, that discount amount will be utilized from which account? It will be utilized from share forfeited account. Okay. The reason is very simple. We need not refund this amount, whatever has been collected from the shareholders, right? So, share forfeited account will basically be representing what? It would be representing the amount which has already been collected from the shareholders. Okay. Now, this amount, whatever we have already collected, are we going to refund it back to the shareholders? No, we are not going to refund this amount back to the shareholders. So subsequently, whenever these forfeited shares are reissued, the discount amount, okay, can be utilized from this particular share forfeited account. And what would be the entry? The entry for reissue would be bank account debit to the extent of whatever amount we are receiving, share forfeited account debit to the extent of utilization of discount on reissue, okay, to share capital account, always at nominal value. And when it comes to the transfer entry, okay, so whatever is the unutilized amount relating to those shares which are actually reissued should be transferred to capital reserve. Okay, so unutilized amount available in the share forfeited account related to the reissued shares has to be transferred to capital reserve. Okay, so the entry will be what? Share forfeited account debit to capital reserve. Hope you guys understood. And again, when it comes to oversubscription, in the last illustration we discussed how exactly the excess application money whatever we are receiving, okay, so it will be utilized towards subsequent stage. Okay, like in the previous illustration, the excess application money was utilized towards allotment as well as first and final call. After utilization also, if there is still some surplus money which is left over, that amount will be refunded back to the shareholders. Clear? So let's look into the next illustration, that is illustration number 17. Okay, so this is again pertaining to oversubscription. Okay, let's have a look into it. Okay, let me just read this particular illustration. JK Limited is a company with authorized capital of 10 lakhs. Okay, so 10 lakh rupees, which is divided into each share of rupees 10 each, of which 6 lakh shares. Okay, so 6 lakh shares had been issued and fully paid up. So we are not worried about these 6 lakh shares which is already been issued and the amount is already been received. Okay, so subsequently if the company wants to issue further share, okay, so how much would be the further shares which it can issue? Out of 10 lakh shares, it has already issued 6 lakh shares. So remaining 4 lakh is what the company can maximum issue. Okay, clear? So out of this particular 10 lakh shares, 6 lakh shares is already been issued. So subsequently, whenever the company wants to further issue the shares, the maximum which they can issue is 4 lakh. Remember, I told you the issued shares at no point of time can exceed the authorized shares. Okay, so authorized is nothing but the maximum shares which the company has got authority to issue. Okay, so at no point of time the company can issue more than its authorized share capital. Clear? Now look into this. The company proposed to further issue, okay, so 1 lakh shares. Okay, so 1 lakh shares of rupees 10 each at 14 rupees. So 10 rupees share is being issued at 14 rupees. Okay, so 4 rupees will be the premium. Now let's see what exactly is the breakup of this particular issue price. Okay, so 2 rupees per share payable on application, which is received on 1st July. So 2 rupees is what will be collected at application stage. Allotment which will be made on 10 July will be collecting 5 rupees, which is including premium. So application stage money is 2 rupees, allotment is 5 rupees, which includes the premium. The final call for the balance amount. Now out of 14, if you see, 2 rupees is collected at application, 5 rupees is collected at allotment. So totally out of 14 rupees, we are collecting 7 rupees during these two stages, application and allotment. The remaining 7 rupees is what will be collected at first and final call, which will be made on 31st Jan. Application were received. Okay, now look at this. Application received was how much? 3,55,000 shares. Okay, how many shares did the company issue? The company issued 1 lakh shares. Okay, but public are applying for 3,55,000 shares. Okay, this is again clearly a sign of what? Clearly a sign of oversubscription. Okay, now how are they going to deal with this particular excess application? Are they rejecting any, or are they proportionately allotting the shares? Okay, so that is what they have given over here. Look at this. Application were received for 3,55,000 shares and were dealt with as follows. So applicants for 5,000 shares received full allotment. Okay, they are receiving full allotment. Everybody who applied for the shares will be getting exactly the same number of shares which were applied by them. Okay, so applicant for 30,000 shares received an allotment of 1 share for every 2 applied. Okay, look at this. The second category is 30,000 shares. For them, the company will be allotting 1 share for every 2 shares applied by them. Okay, so everybody who has applied for 2 shares, they'll be getting 1 share. If a person has applied for 30,000 shares in this case, they'll be getting how much? 15,000 shares. Okay, person who has applied for 2 shares, he'll be getting 1 share. Okay, so here 30,000 shareholders will be getting only 15,000 shares. Okay, then when it comes to last category, okay, after this, what are they telling? No money was returned. Okay, excess application money is not being returned to the applicant. The surplus on application being used to reduce the amount which is due on allotment. So whatever is the excess application money which is received, that will be adjusted towards allotment stage. Okay, so applicants for 3,20,000 shares received an allotment of 1 share for every 4 applied. Okay, so the remaining 3,20,000 shares, so the company will be allotting 1 share for every 4 applied. Okay, the money due on allotment was retained by the company, excess being returned. Now here if you see, sorry, excess application money is being adjusted only towards allotment stage. Okay, they are clearly mentioning, read this statement carefully. What are they telling? The money due on allotment was retained by the company, the excess being returned. They are not talking about further adjustment towards first and final call. Okay, so whatever is the excess application money which is received, the company will be adjusting it towards the allotment stage. After adjustment, if there is still some surplus amount which is left over, the company is refunding it back. Okay, the money due on final call was received on the due date. You are required to record the transaction in the journal of JK Limited. Okay, so here they are just asking us to pass the journal entry pertaining to issue of shares. Here if you guys observe carefully, they haven't given any information relating to forfeiture nor any information relating to reissue. Okay, so all that they are asking is to pass the journal entries pertaining to issue. Okay, now I'll just write the information over here. The issue price per share is 14 rupees. Clear? So this is being collected in 3 stages. Okay, so as you already know, application stage, allotment stage and first and final call stage. Clear? So 2 rupees being collected at application, 5 rupees being collected at allotment, which includes premium. Okay, so including premium, it is 5 rupees. So out of this 5 rupees, how much will be transferred to securities premium? 10 rupees share if it is issued at 14, 4 rupees will be securities premium. The remaining is what will be transferred to share capital. So share capital will be 1 rupee. Clear? And then when it comes to first and final call, so the balance amount, which would be 7 rupees. Hope you guys understood this. Okay, so this is the information relating to issue price. Now, how many shares were issued by the company? The company issued was 1 lakh. Okay, so 1 lakh share is what was issued by the company. Shares applied. So how many shares were actually applied by the public? Look at this. Application were received for 3,55,000 shares. Do you find this? So 3,55,000 shares. So excess application we are receiving to the extent of 2,55,000. So clearly a sign of what? Clearly a sign of oversubscription. Okay. Now, how are they going to deal with this? Okay, so that is what has been told over here. So total shares applied was 3,55,000 shares. Now this 3,55,000 shares, they have made it into three parts. Okay, three category basically. Okay, so category number 1. So 5,000 shares. Okay, so category number 1, if you see, this is 5,000 shares. The second category, if you see, it is 30,000 shares. And then the third category, if you see, it is 3,20,000 shares. It is given over here. Look at this: 5,000, 30,000 and 3,20,000 shares. Okay, so we have totally got like three categories. Clear? So if you just add the total of this, 3,20,000 plus 30,000 would be 3,50,000. 3,50,000 plus 5,000 will be how much? This would be 3,55,000. Now, although I have received the application to the extent of 3,55,000, I cannot make allotment for everybody, because the maximum allotment which I can make is just 1 lakh, because 1 lakh is the number of share which I actually issued. Now, let us understand proportionately how these shares will be allotted. Okay. Okay, let's understand how exactly this particular 1 lakh shares will be allotted to them. Okay. Now, with respect to the first group, what are they telling? They are clearly mentioning that application or applicants for 5,000 shares received allotment in full. Okay, so here this would be full allotment. Okay, so people who applied for 5,000 shares will be getting an allotment of 5,000 shares. Okay, so number of shares allotted would be 5,000 shares. Now, when it comes to second category, what are they telling? Here they are telling applicants for 30,000 shares received an allotment of 1 share for every 2 applied. Okay, so people who have applied for 2 shares will be getting 1 share. Okay, so here they have applied totally to the extent of 30,000 shares. So how much would be they receiving? Okay, so if a person has applied for 2 shares, he will be getting 1 share. So totally, if the people have applied for 30,000 shares, they will be getting how much? Cross multiplication, 30,000 into 1 by 2. Did you understand this? So if a person has applied for 2 shares, he will be getting 1 share. So effectively 30,000 shareholders should be getting how much? This is question mark. Clear? So cross multiplication, it's like this: cross multiplication, 30,000 into 1 divided by 2. So this would be like 15,000 shares. Clear? So 5,000 over here, 15,000 over here. Okay. Now lastly over here, how are they going to deal with this 3,20,000 shares? So they have mentioned that 1 share will be allotted for 4 shares which were applied. So if a person has applied for 4 shares, he will be getting 1 share. So effectively 3,20,000 shareholders will be getting how many shares? Cross multiplication again. All you need to do is cross multiplication. Okay, so this would be 3,20,000 into 1 by 4. Okay, how much do we get? 80,000, right? So this would be 80,000 shares. Now if you add all these three, okay, so 5,000 plus 15,000, that is 20,000, 20,000 plus 80,000, 1 lakh. This is how the allotment will be made. The company issued 1 lakh shares, although 3,50,000 applied for, okay, exactly 1 lakh will be allotted to them. Hope you guys understood this. Any doubt, any confusion? Okay, so same thing, let us just make a note of it in the notes. Sorry. So first thing is, let me just write the information relating to issue price. Okay, so issue price in this case is 14 rupees. So application is 2 rupees, allotment is 5 including premium. Okay, so premium is included in allotment stage. So this is including premium. and first and final call would be the balance amount, that is 7. So again, out of this particular 5 rupees, how much will be transferred to securities premium? 4 rupees is securities premium, and then the balance will be transferred to share capital, which is 1 rupee. Okay, now number of shares issued was 1 lakh. Number of shares applied by public. So public applied for how many shares? So public, if you see, they applied for 3,55,000 shares. So clearly a sign of oversubscription. Okay, so excess application received will be 3,55,000 minus 1 lakh, that would be 2,55,000. So this is clearly a sign of oversubscription. So how are they going to deal with this? Okay, so this 3,55,000 shares is being categorized into 3 categories. Okay, the first category with 5,000 shares, the second category with, I think, 30,000, right? Yeah, 30,000 shares, and then when it comes to last category, it is with respect to 3,20,000 shares. Yes, clear? Now let us understand how exactly the company will be dealing with these 3 categories. Okay, observe carefully. So here allotment will be made in full. Okay, full allotment. Okay, so 1 share for every 2 applied. Clear? So here will be 1 share for every 4 share applied for. Is this clear? So if a person has applied for 4 share, he will be getting 1 share, as good as this. Okay, so here full allotment. So everybody who has applied for 1 share will be getting 1 allotment. So technically speaking, if a person has applied for 5,000 shares, how many shares should he be getting? Cross multiplication. Okay, so how much do we get? 5,000 into 1 by 1. Okay, so this would be 5,000 shares. Clear? So here 1 share for every 2 applied for. Okay, if a person has applied for 2 share, he will be getting 1 share. Okay, so effectively, if 30,000 shareholders have applied, how many shares will they be receiving? Okay, so cross multiplication again, 30,000 into, it should be 2. Okay, so people who have applied, see, look at this. When I am writing 30,000 on the left side, what does this represent? This 30,000 represent the number of shares which were actually applied. Okay, so that's why even in the top, the number of shares actually applied should come in the left. Okay, so 2 shares if you are applying, you will be getting 1 share. Okay, so 30,000 shares if you are applying, you will be getting how much? Basically half, guys. Okay, so this would be 15,000 shares. Clear? If a person has applied 2, if he is getting 1. If a person has applied for 10, he will be getting 5. If a person has applied for 100, he will be getting 50. If a person has applied for 1000, he will be getting 500 shares. So same way, if a person has applied for 30,000 shares, he will be getting half of it, which is 15,000 shares. So here it would be like this. If a person has applied for 4 share, he will be getting 1. Okay, if a person has applied for 4 share, he will be getting 1. So in this case, 3,20,000 shareholders applied. Okay, so how many shares will they be receiving? Okay, so 3,20,000 into 1 by 4. Okay, 1/4 is what they will be getting. So this would be effectively 80,000 shares. So these are the actual number of shares which will be allotted. Okay, if you just check out the total of these, it would be exactly equivalent to 1 lakh. Clear? Now after this, we need to be preparing the schedule, okay, pertaining to the amount which was actually received, okay, so that it would be easy for us to pass the journal entry. Okay, so schedule. showing the amount received. So category application money actually received. Okay, application money received. Application money which was supposed to be collected So what exactly is the application money which the company was supposed to collect? Okay, so excess application money. How much is the excess application money which was received out of this? Okay, allotment money due. Adjustment of excess application money towards allotment. Okay, adjustment of excess application money towards allotment. Okay, and then balance allotment money to be received. Okay, so after adjustment, okay, is there any other balance amount which has to be received from the shareholder? Okay, and then refund of excess application money. Clear? So these are the column what we need to fill. Now pay attention over here. So let us understand, okay, how exactly will we be filling. So here if you see, we have got three category: 5,000 lot, 30,000 lot and 3,20,000 lot. Okay, so category we have got three. First one, 5,000 shares, 30,000 shares, and 3,20,000 shares. Clear? So I would have actually received the application money pertaining to these 3,55,000. Although I am issuing just 1 lakh shares, people applied for 3,55,000. So technically they would have paid the application money pertaining to this 3,55,000 shares. And how much is the application money? So application stage money, if you guys see, it is how much? It is 2 rupees, right? Application money is 2 rupees. So here this would be 5,000 into 2. And then it would be 30,000 into 2, and then finally 3,20,000 into 2. Clear? So this is the amount which would have been actually received. If you just check out the total, it is 7,10,000. Okay, in simple word, this is nothing but 3,55,000 into 2 rupees. Okay, now after this, we just need to calculate the application money which the company was supposed to collect. Okay, so let's just understand how much exactly is the application money which the company was actually supposed to collect. Okay, so company was actually supposed to collect the application money pertaining to 1 lakh shares, right? Correct. So here if you see, the actual allotment is available. Okay, so here this would be 5,000 into 2, and then it would be 15,000 into 2, and then finally 80,000 into 2. Clear? So I'm just considering these shares, guys. Actual allotment will be made for 5,000 shares pertaining to first category, 15,000 with respect to second category, and 80,000 pertaining to the third category. So 5,000 into 2 is 10,000, 15,000 into 2 is 30,000, 80,000 into 2 is 1,60,000. Okay, so look at the total. So total, if you see, it is 2 lakh. Company will be making an allotment of 1 lakh shares. So 1 lakh shares into 2 rupees, 2 lakh rupees. Did you understand this? Clear? Now excess application money. I was supposed to collect 10,000. This is the amount which I was supposed to collect. 1 lakh shares into 2, that is 2 lakh, but I collected 7 lakh 20. So effectively I have collected how much? I have collected 5 lakh 10 rupees of excess application money. So we need to calculate it individually. Okay, in the first instance, I was supposed to collect 10,000, I collected 10,000. Have I received any excess application? No, nothing was collected in excess. Okay, so second place wherein I was supposed to collect 30,000, how much did I collect? I have collected 60,000. So I have received excess application money of how much? 30,000. Same way if you calculate for the next case, the place wherein I was supposed to collect only 1 lakh 60, I ended up receiving 6 lakh 40. So I have collected 4 lakh 80,000 rupees of excess application money. Okay, so 5 lakh 10, how did we get this 5 lakh 10? 7 lakh 10 minus 2 lakh, this is 5 lakh 10. Now when it comes to allotment, what is the amount which is due at allotment? So I think 5 rupees is what is due at allotment, right? So check this out. Allotment including premium, 5 rupees is what is due. Now here 5 rupees into how many shares? This would be 5,000 shares. Okay, so 5,000 into 5. You need to be considering these shares, guys. Okay, so these shares, okay, which are actually being allotted. Okay, so in the second case it would be 15,000 into 5. Okay, because allotment money which is due is 5 rupees, and in the third case it would be 80,000 into 5. This is the amount which I am supposed to collect. Okay, so the total would be 5 lakh. How is it 5 lakh? 1 lakh share is what I am going to allot. 1 lakh into 5 rupees, this would be 5 lakh. Clear? Adjustment of excess application money towards allotment. So here, do I have any excess application money? No, zero. I was supposed to collect 10,000, I collected 10,000. Full allotment. I am not receiving any excess application. Okay, so therefore, very simple it is. Just a second. Just a second. Okay. Now, in the first case, did I receive any excess application money? No, I did not receive any excess application money. So, nothing can be adjusted towards allotment. Okay. So, is there any excess application money which I can adjust it towards allotment? No, zero. Clear? So, look at the second case. Allotment money is due, which is 75,000. Okay. So, how much is the excess application money which I have got? I've got 30,000 rupees of excess application money. Okay, so out of 75, don't you think this 30,000 I can adjust it towards allotment? And how much is the balance which I'll be receiving from the shareholder? Out of 75, 30,000 already I have received at the time of application stage. Excess money I have received. The balance will be collected at allotment from the shareholder. So from the shareholders, 45,000 rupees has to be collected. What about the previous case? 25,000 is what is due. Okay, at allotment. Out of this 25, did you adjust anything from the excess application? No. Okay, why? Because there was no excess application money. So entire 25,000 you will be actually collecting from the shareholders at the time of allotment. Now same way you guys try and tell me what will happen in the last case. So 4 lakh rupees is the amount which is due at allotment. I have got an excess application money of 4 lakh 80. Don't you think it is more than sufficient? So entire 4 lakh I can adjust it. Okay. So I was supposed to collect 4 lakh rupees at the time of allotment. I've got an excess application. It means during application stage itself, I've received 4 lakh 80,000 rupees. Okay. So which is self-sufficient in order to adjust this allotment money. Now, out of this 4 lakh, entire 4 lakh rupees will get adjusted from the allotment money. Will I be receiving anything from the shareholders at the time of allotment? No, I need not receive anything from the shareholder because it is already adjusted from this particular 4 lakh 80. Even after adjustment, 80,000 rupees will still be left over in this particular excess application money. Okay, so this 80,000 is what I need to refund. So out of this 4 lakh 80, I adjusted it to the extent of 4 lakh. The balance 80,000 is what you need to be refunding it. Did you understand this? Clear? In these two instances, it would be 0. Okay, so why is it 0? No excess application money received, so nothing was adjusted. Okay, so in the next case, Excess application money which I received was 30, entire 30,000 is adjusted towards allotment, so nothing will be refunded. Clear? So once you guys are ready with this particular table, it would be very easy for you to pass the journal entry. Now they are just asking us to pass the journal entry. Let us quickly pass the journal entry. Okay, with respect to application stage, guys, I'm not mentioning the narrations, okay, in any of the journal entry, but make sure in the examination you guys write the narration. Okay, so very simple narration. If you just mention for application money received, suppose, okay, so being application money received more than sufficient, so bank account debit. Now you guys, by having a look at this particular table, tell me how much exactly is the actual application money which was received. Is it 7,10,000 or is it 2 lakh? How much is the application money which I actually received? Don't you think I ended up receiving the application money pertaining to 55,000 shares? So this would be the amount which I need to consider. Okay, so this would be the amount which I need to consider. So when I pass this entry, bank account debit to share application account, the entry would be passed with respect to 7,10,000 shares. Okay, or 7,10,000 rupees. So bank account debit to share application account 7,10,000, 7,10,000. This would be your first entry. Okay, so simultaneously let's just keep on having look at the solution. Okay, so do you find this? Bank account debit to share application 7,10,000, 7,10,000. Okay, now out of this 7,10,000, how much is the amount which I'm actually supposed to transfer to share capital? Only 2 lakh is what I need to transfer. Okay, so share application account debit. In the share application, if you see, I've got 7,10,000. Okay, now look at this particular entry carefully. So out of this 7,10,000, how much amount am I going to transfer to share capital? Only with respect to those 1 lakh shares for which I'll actually be making allotment. Okay, so to share capital account, this would be 2 lakh. To bank account. So what is this bank account? This is nothing but the refund. So can you tell me how much is the amount which I'm actually refunding it? In this case, we just have a look at the table. Okay, so where is the refund column? This is the refund column. 80,000 is what I'll be refunding it. Okay, so 80,000, I'll just write it over here. So 80,000, I'll just refund it. And how much amount is being adjusted towards allotment? To share allotment account. If you just have a look at the heading of the table, okay, look at this adjustment of excess application money towards allotment. 4,30,000, I'm adjusting it towards allotment, and then 80,000 I'm refunding it. Okay, so excess application money was how much? If you see over here, I'll just highlight it. This is the excess application money which was received. Okay, 5,10,000. Out of this 5,10,000, 4,30,000 I'm adjusting it towards the allotment. How much is the amount which is being refunded? 80. If you just add these two, 80 and 4,30,000, you will be getting same 5,10,000. Okay, so the amount which is being adjusted towards allotment is 4,30,000, readily available in our schedule or table. This would be the journal entry. In this journal entry, I have given effect for all the three scenarios. That is the amount which is being transferred to share capital, the amount which is being refunded to the shareholders, and the amount which is being adjusted towards the allotment stage. Okay, so let's have a look at the journal entry which is passed in your book. Look at this. Share application account debit 7,10,000, to share capital 2 lakh, to share allotment 4,30,000. Look at our entry, to share allotment 4,30,000, and to bank account refund 80,000. So to bank account 80,000. Clear? So then comes the next stage, that is allotment stage. Clear? So when it comes to allotment stage, we need to be passing the due entry first and then the receipt entry. Okay, so let us pass the due entry first. So here the amount is due from how many shareholders? So 1 lakh shareholders. How much is the amount which is due at allotment? Allotment money was 5 rupees including premium. Okay, so wherever you give effect for share capital, that is the place wherein you need to be giving effect to securities premium also. So the entry would be like this: share allotment account debit 5 lakh. Either you guys can refer this particular schedule. Look at this. Allotment money due is 5 lakh. Okay, or straight away 1 lakh into 5 rupees. Okay, that would be 5 lakh. To share capital, this would be 1 lakh into 1 rupee, it should be 1 lakh. to securities premium account. This would be 1 lakh into 4, which is 4 lakh. This would be the journal entry. Okay, this is the due entry. Now, when it comes to receipt entry, okay, tell me what is the actual amount which was received at allotment. Look at this. Balance amount actually received from the shareholder, it is just 70,000. Okay, so this is just 70,000. So when I'm passing the receipt entry, this has to be passed only to the extent of 70,000. Okay, so bank account debit 70,000 to share allotment account 70,000. Clear? So bank account debit to share allotment account 70,000. Now if you see over here, look at this. I told you that all the intermediary account will get nullified, right? So look at this share allotment account 5 lakh over here. Okay, a debit of 5 lakh. Just observe this carefully. Here there is a credit of 70,000. Okay, to the extent of 70,000 it was nullified over here. To the extent of 4 lakh 30 it got nullified over here. So credit total if you see 4 lakh 30 and 70, which is 5 lakh, and debit total if you see it is 5 lakh. So 5 lakh rupees of debit and 5 lakh rupees of credit, this will get nullified. Is this clear? And then when it comes to first and final call, okay, so call money stage. Again the due entry first and then the receipt entry. Okay, so what will be the due entry? Here entire amount whatever is due will be received. Okay, so due entry will be share first and final call account debit. Okay, so share first and final call account debit 1 lakh shares into how much is the amount which is due at first and final call? It is 7, right? So this would be 7 lakh to share capital account 7 lakh. This would be the due entry. Okay, what about the receipt entry? The receipt entry would be like this. This entire amount was actually received. So bank account debit 7 lakh. Okay, so because they haven't given any information about those shareholders who defaulted. Okay, so bank account debit to share first and final call 7 lakh. This would be the receipt entry. Okay, we just check out the solution. Look at this. So before that, this is the due entry. Share allotment account debit to share capital to securities premium. Okay, 1 lakh and 4 lakh. Same entry is what we have passed. Clear? Look at this. Share allotment account debit to share capital 1 lakh to securities premium 4 lakh. Same entry. And when we actually receive bank account debit to share allotment only 70,000. Look at this. Clear? So only 70,000 is what we'll be receiving. The remaining is already adjusted from the excess application. Then when it comes to call money stage, very simple entries, due entry and then the receipt entry. Due entry will be what? Share first and final call account debit to share capital 7 lakh, 7 lakh. And receipt entry will be what? Bank account debit to share first and final call 7 and 7 lakh. Okay, that's all. Very simple, right? I hope everybody understood this. Anybody having any doubt, any confusion so far? Clear? Okay, now let's have a look at this particular next illustration, that is illustration number 18. Okay, so let me just read this question. Anybody having any doubt with the previous illustration? Previous illustration, there was no forfeiture, nor there was any reissue. Okay, only pro rata allotment, that is proportionate allotment. Okay, so in case of oversubscription, how exactly do we deal with that particular pro rata entries? Okay, that is what we discussed in the previous illustration. Okay, there was nothing pertaining to forfeiture or reissue of the forfeited shares. Clear? So fine, let's move on to this illustration number 18. Let me read this. A company invited the public to subscribe for 100 lakh equity shares, okay, of rupees 100 each at a premium of 10. Okay, so almost it is issuing 1 crore equity shares of 100 at a premium of 10, that is the issue price will be 110. Okay, at a premium of 10 per share, payable on allotment. This premium is payable at what stage? Premium is payable at allotment stage. So payment were to be made as follows: application 20, allotment 40, which includes the premium of 10. Okay, first call 30 and final call 20. Okay, so 20 rupees application, 40 rupees of allotment including premium, okay, and then 30 rupees pertaining to first call and 20 rupees pertaining to final call, okay. So 20, 40, 20, sorry 30 and 20. So application were received to the extent of 1 crore 30 lakh shares, okay, that is 130 lakh shares. Application for 20 lakh shares were rejected, okay, and the allotment was made proportionately to the remaining applicants. So out of this, okay, I am issuing 100 lakh shares, okay, I am issuing 100 lakh shares, whereas 130 lakh shares were applied by the public. So there is an excess application received to the extent of 30 lakh shares. Out of this 30 lakh shares, the company is rejecting 20 lakh shares and it is refunding the amount. With respect to the balance 10 lakh shares, it was proportionately allotted in this manner, okay. So and the allotment was made proportionately to the remaining applicant, that is 10 lakh shares. Both the calls were made and all the money were received except final call, okay. So both the call were made and all the money was received except final call on 3 lakh shares, okay, which are forfeited after due notice. So all the amount has been received, okay. So one of the shareholder who was holding 3 lakh share, he did not pay the second and final call. Later, out of this 3 lakh, 2 lakh shares were reissued at fully paid up value of 85 rupees per share. So 100 rupee share is being reissued at what price? It is being reissued at 15, okay. It means, sorry, 85, it means 15 rupees will be the discount, okay. So pass the journal entry. Just go through this particular question, we'll be solving it now. Just go through the question once. Okay, so let us just briefly understand this particular illustration before solving it, okay. So here if you see, what was the issue price? The issue price in this case was 100 rupee share is being issued at 110, okay. So 110 is the issue price. Out of this 110, it is being collected in 4 stages basically, okay. So one is application stage, allotment stage including premium, then we have got first call, and then second and final call, okay. Now at the time of application, how much amount is being collected? At application, if you see, it is 20 rupees. At allotment, it is 40 rupees. At first call, it is 30, and again second and final call, it is 20, okay. 30 and 20. So add this, 30 plus 20 is 50, 50 plus 40 is 90, 90 plus 20 is 110, okay. So out of this 40 again, how much is the amount belonging to securities premium? Securities premium would be 10 rupees. The balance would be relating to share capital, which would be how much? 30 rupees. Correct? Okay. Now, how many shares were issued by the company? How many shares were issued by the company? This is illustration 18, right? Yes. So the company had issued 100 lakh shares, okay. So the company issued 100 lakh shares, okay. 100 lakh shares issued, but 130 lakhs shares were applied, okay. So 30 lakhs would be excess application, okay. So this is excess application received. Clear? So the company is collecting excess application of 30, and again out of this 30, it clearly mentioned that 20 lakhs were rejected, okay. So we need to refund the amount pertaining to this 20 lakh, okay. And when it comes to 10 lakh, pro rata allotment. Clear? So with respect to this 10 lakh, proportionately the shares will give or will get allotted, okay. As simple as that. Okay, so let me just write this information again over here in the notes. So issue price in this case is 110, okay. So out of this 110, how much is collected at application? Application, it is collected like 20 rupees, okay. So allotment, it is 40. So out of this 40, securities premium will be 10 and 30 rupees will be application. First call, the company is collecting 30 rupees, and there is one more thing, that is second and final call, okay. The company is collecting 20 rupees again. Clear? Now number of shares issued. The company issued 100 lakh shares, okay. So number of shares applied by the public. So public applied for 130 lakh shares. Okay, so clearly an oversubscription, okay, of how many shares? Of 30 lakh shares. Okay, you can call it as either oversubscription or excess application received. Now, how are we going to deal with this 30 lakh shares? Okay, so out of this 30 lakh shares, reject 20 lakh shares. Okay, remaining proportionate allotment of 10 lakh shares. Clear? So if I'm rejecting this 20 lakh shares, obviously I'll have to refund the excess application money. Okay, so refund excess application money. Okay, whereas when it comes to pro rata allotment, do we refund it? No. Okay, so we'll be adjusting it towards subsequent stage. Okay, so excess application money shall be adjusted towards allotment. Clear? So, and when it comes to how exactly the company will be dealing with it, it has clearly been given. Okay, so what are they telling? Applicant were received for, or applications were received for 130 lakh shares, application for 20 lakh shares were rejected and allotment was made proportionately to the remaining applicants. Both the calls were made and all the money were received except the final call to the extent of 3 lakh shares which are forfeited, okay, after due notice. And out of this 3 lakh shares which is being forfeited, 2 lakh we are reissuing it at 85. Okay, so let's pass the journal entry. Okay, so all we need to do is just pass the journal entry. So first journal entry would be with respect to collection of application money. So bank account debit. Now you guys think and tell me whether I would have received the application money pertaining to 100 lakh shares or 130 lakh shares. Don't you think I would have collected the application money pertaining to 130 lakh shares? So 130 lakh into 20. Okay, this would be how much? This would be 2600, right? So 2600 lakh to share application account 2600 lakh. This would be your very first entry. Okay, so if you guys just have a look at it, look at this bank account debit 2,60,000, again add 3 zeros. Okay, this is nothing but 2600 lakhs to share application account 2600 lakh. Now out of this 2600, how much is the amount which I need to transfer to share capital? Okay, so let us just pass the entry separately for simple understanding or easy understanding. Okay, so the entry would be share application account debit only to the extent of 100 lakh is what we need to transfer it to share capital. Okay, so this would be 2000 lakh to share capital account 2000 lakh. So only pertaining to those 100 lakh shares is what has to be transferred to share capital. And when it comes to refund, okay, so I'll be refunding the amount pertaining to 20 lakh shares. Okay, so when it comes to refund, you guys already know the journal entry. The journal entry will be share application account debit 20 lakh shares which I'm rejecting, I'll be refunding it. Okay, so 20 lakh into 20. Okay, so this would be how much? This would be 400 lakh to bank account 400 lakh. Clear? So share application account debit to bank account 400 lakh, 400 lakh. This would be the entry. And then when it comes to the next thing, okay, look at this share application account debit to bank account 400 lakh, 400 lakh it is. And after this, okay, so this part we have already done. Okay, share application account debit to share capital. Okay, so 2000 lakh we have already passed it over here. 2000 lakh, 2000 lakh. Now the amount which I'll be adjusting it towards the allotment. Okay, so what would be the entry? How much is the amount which I'll be adjusting it towards allotment? So 10 lakh into 20. Okay, so 10 lakh into 20. So you know the entry, share application account debit 10 lakh shares into 20. This would be 200 lakh to what? So this will get adjusted towards the allotment to share allotment account 200 lakh. This will be the actual journal entry. Okay, share application account debit to share allotment. Or if you guys want to pass the entry together, okay, you guys can still pass a single entry like this. Okay, I'll just write the single entry over here. The entry would be like this: share application account debit. So totally I received 2600 lakh. Okay, so to what? To share capital account. Out of this, how much will be transferred to share capital? 2000 lakh will be transferred to share capital. Okay, so 100 lakh into 20. Okay, so out of this, to bank account, how much is the amount which will be refunded? So 400 lakh is the amount which will be refunded. Okay, and how much is the amount which will get adjusted towards the subsequent stage, that is allotment stage? To share allotment account to the extent of another 200. Okay, so either you can pass the journal entries separately, or if you want to pass a single entry, this would be the single entry. Okay, so this is nothing but the cluster of all these three. Okay, so either you can pass 3 entries like this, or together you guys can just pass a single entry like this. Did you understand? Clear? Okay, so after this, when the allotment money is due, okay, so what will be the entry? So all these entries are pertaining to application stage. All these entries are pertaining to application, then comes the allotment stage. Okay, so when it comes to allotment stage, first entry which I'll be passing would be the due entry. Okay, you already know the due entry, right? So share allotment account debtor 100 lakh shares into what is due at allotment, or how much is the amount which is due at allotment including premium. So 40 rupees is what is due at allotment. Okay, so 10 rupees is premium. Okay, so 40 rupees is what is due at allotment. So this would be 4000 lakh to share capital account. So here out of this 40, 30 rupees is what is pertaining to share capital. Okay, so 3000 lakh will be transferred to share capital, and the 10 rupees is pertaining to what? It is pertaining to securities premium. Okay, so that has to be transferred to securities premium. Okay, so to securities premium account, this would be again 100 lakh into 10 rupees. This would be 1000 lakh. This would be the due entry. Okay, just check out the entry in your book. Do you find the same? Share allotment account debit 4000 lakh to equity share capital 3000 lakh to securities premium 1000 lakh. Okay, now after this, what about the amount which I'll actually be collecting? So observe over here, out of this particular 4000 lakh which I'm supposed to collect, 200 lakh I've already collected at the time of application stage itself. Okay, this 200 lakh is the excess application money which is getting adjusted towards allotment. So when I actually receive, okay, so I'll be receiving how much? I'll be receiving only to the extent of 3800 shares or 3800 lakh rupees. Okay, how did I get this 3800? So 4000 lakh minus, don't you think here this 200 lakh of excess application money is already adjusted towards allotment? So you need to be deducting it. So when you actually receive, you will be receiving only 3800 lakh. Okay, so 3800 lakh account, sorry, 3800 lakh to what? To share allotment account. I'll not be collecting entire 4000 lakh over here. The reason is very simple. I've already collected excess application, okay, or excess money at the time of application, which will get adjusted towards allotment to the extent of this 200 lakh. Is this clear? I hope everybody understood this. Okay, so look at the solution over here. Bank account debit to share allotment, it is only to the extent of 3800 lakh, 3800 lakh. Okay, and then when it comes to call money stage, okay, so when it comes to call money stage, very simple thing. So all we need to do is we just need to pass the due entry first and then the receipt entry. So here call money stage, if you see, we have got first call as well as second and final call. So when it comes to first call, how much is the money which is due at first call? 30 rupees is what is due at first call. Okay, so let me pass the journal entry for this. Share first call account debit 100 lakh into 30 rupees. 100 lakh shares into 30, this would be 3000 lakh to what? To share capital account. This will be the due entry. Okay, so after this, they have clearly mentioned that one of the shareholder defaulted at the time of second and final call. So with respect to first call, we don't have any default. It means entire 3000 lakh was collected. Okay, so then when I pass the receipt entry, it would be like this: bank account debit 3000 lakh to share first call account. Clear? So bank account debit to share first call. Okay, so then when it comes to second and final call, again I'll be passing the due entry. Okay, so due entry for second call. So what will be the entry? The entry would be like this: share second and final call account debit. I think 20 rupees is what is due at second and final call, right? So 100 lakh into 20, this would be 2000 lakh to share capital account. To share capital account, 2000 lakh. Okay, so this would be the due entry. Okay, so before that, let's just check out the entries which they have passed. So with respect to first call, yes, share first call account debit to share capital, 3000 lakh, 3000 lakh, entire 3000 lakh is collected. So bank account debit to share first call, 3000 lakh, 3000 lakh. Now, when it comes to the second call, they have clearly mentioned in the question that one of the shareholder who was holding 3 lakh shares, okay, he did not pay the second and final call. So out of this 100 lakh, we wouldn't have received the amount, okay, with respect to second and final call from, okay, 3 lakh shareholders. Okay, so the receipt entry would be like this. Okay, pay attention over here carefully. So bank account debit, okay, look at this. Bank account debit, I wouldn't have collected with respect to entire 100 lakh. Out of entire 100 lakh, there was default which was made by 3 lakh shareholders. So only to the extent of 97 lakh, I would have collected this amount. Okay, so 97 into 20. So 1940 is what I would have collected. So bank account debit 1940. Calls in arrears. Okay, so there is some calls in arrears. So calls in arrears account debit. So here when it comes to calls in arrears, how much would be the calls in arrears? 3 lakh shares into 20. Okay, so this would be to the extent of 60 lakh. To what? To share second and final call. The place wherein I was supposed to collect 2000 lakh, I end up collecting only 1940 lakh. Clear? So this would be the entry. Now, what am I going to do with this particular 3 lakh shares? Okay, so these 3 lakh shares are getting forfeited. Okay, now I just need to pass the forfeiture entry pertaining to these 3 lakh. Okay, so these 3 lakh shares which are getting forfeited, we just need to pass the forfeiture entry. Just because the shareholder did not pay the amount pertaining to second and final call, the company decided to forfeit the shares. Look at this. Were forfeited after due notice. Okay, so before passing the forfeiture entry, let's have a look at the entry which has been passed in your study material. Share second and final call account debit to share capital 2000 lakh, 2000 lakh. Okay, this is the due entry. Look at the receipt entry. Bank account debit 1940 lakh, calls in arrears account debit 600 lakh, to equity share second and final call 2000 lakh. The same entry. Clear? Now let us pass the journal entry for forfeiture. Okay, so when it comes to the entry for forfeiture, it would be like this. I need to debit the share capital. Okay, so here the shares were issued at premium. So when it comes to the entry for forfeiture, you need to check upon whether the premium amount is already collected or not. So these 3 lakh shareholders made default at what stage? They are making default at second and final call stage, the last stage. Premium was included in allotment. So don't you think this particular securities premium has already been collected? If premium has already been collected, should I be worrying about it? I need not worry about it. When premium has already been received, we need not worry about it. We need to completely ignore the securities premium in the journal entry. Clear? So when I pass the journal entry, the journal entry would be like this. Okay, so share capital account debit. So don't you think these shares were fully called up? So when I say premium, you need to ignore it completely. Okay, so share capital 3 lakh into 100, because 100 is the nominal value. Always remember, share capital will always be appearing at face value or nominal value. Okay, so this would be 300 lakh. Will I be debiting securities premium? No. As it is already been collected, we need not worry of it. Okay, so securities premium is already been received. Don't worry about it at all. So share capital account debit to share forfeited account to the extent of amount which is already been collected. Now out of this particular 3 lakh shareholders, can you tell me how much is the amount which is already collected? I'll just go back to the issue price. Look at this. This is the issue price, right? So when I say ignore securities premium, ignore it completely. Okay, you need not worry about this at all. Okay, so when I say the amount which was collected, you cannot consider 20, 40 and 30. You can consider only 20 rupees over here, 30 rupees over here and 30 rupees over here. Getting my point? So when I say securities premium is already been received, okay, ignore it. Ignore the entire stuff. Okay, even this 30 rupees has, sorry, even this 10 rupees of premium, it has to be ignored. Okay, because it is already been received. I'm not worried about this premium at all. Clear? So effectively 20 plus 30 plus 30. Okay, so that is 80 rupees is what is already been received. Okay, so when I pass this particular entry for forfeiture, share forfeited account will be representing the amount which is already received. So this would be to the extent of 80 rupees. Okay, 20 rupees application, 30 rupees the share capital component in the allotment, and then 30 rupees pertaining to first call. Okay, so this would be how much? This would be 240 lakh to what? To share second and final call. As the amount is already been transferred to calls in arrears, I'll just be writing 2 calls in arrears account. 2 calls in arrears, 3 lakh into 20 rupees relating to final call is pending. So this would be like 60 lakh. So this would be the entry for forfeiture. Is this clear? Hope you guys understood this. Clear about the entry for forfeiture? Let's just check out the entry which is there in your study material. Look at this. Share capital account debit 3000 lakh, always to the extent of nominal value. Share forfeited account to the extent of 2400 lakh. Sorry, 300, 240 it is. Yeah, 300 lakh, 240 lakh, and then calls in arrears, this would be like 60 lakh. Is this clear? Hope you all understood this. Any doubt, any confusion pertaining to this forfeiture entry? Securities premium, when I say it is already been collected, ignore it completely. Okay, you need not worry about this particular securities premium at all. Okay, now let us pass the entry for reissue. Okay, so let us pass the entry for reissue. Just a second. Now when it comes to reissue, what did the company mention? They mentioned that out of this 3 lakh shares which was cancelled, we are reissuing only to what extent? We are reissuing only to the extent of these 2 lakh shares. Okay, so 2 lakh of the forfeited shares are reissued at what price? These are reissued at 85 rupees per share. Okay, 15 rupees of discount. So when it comes to reissue, let me just pass the journal entry. Okay, so reissue entry would be like this. Bank account debit, 2 lakh shares are being reissued at 85. Okay, so this would be how much? 170 lakh, right? So 170 lakh. Share forfeited account debit. Okay, so you'll be debiting the share forfeited account to what extent? To the extent of the discount. Now 100 rupees share, if you are reissuing it at 85 rupees, how much would be the discount? The discount would be 15 rupees. So 2 lakh into 15, this would be how much? This would be 30 lakhs, right? So this would be 30 lakhs to what? To share capital account, always at nominal value. Share capital would be 2 lakh into 100 rupees is the nominal value. This would be 200 lakh. Clear? So this is the reissue entry. Okay, now after this, transfer to capital reserve. Now whenever only some portion of the forfeited shares are being reissued, at that point of time you cannot just compare like this. I had 240 lakh, I utilized to the extent of 30 lakh, 210 lakh is what I'll be transferring to capital reserve. No. Okay, so what you need to do is, you need to always calculate it in this way. Calculate per share how much is the amount which you had already received. Okay, so amount already received per share, that is the amount which will be available in share forfeited account. Here if you see 80 rupees, we are talking about this 80 rupees. Okay, the amount which has already been received. How did we get this 80 rupees? Simple. I've already showed it over here. 20 rupees of application, 30 rupees of allotment and 30 rupees of first call. Okay, so amount already received per share will be how much? The amount already received per share is okay, so this is 80 rupees. Okay, so less discount per share. Again, everywhere it is per share. For one share, how much is the discount which I am allowing? 15 rupees is the discount which I am allowing. So out of this 80 rupees, this discount of 15 rupees can be utilized from share forfeited account. The balance 65 is what will be transferred to capital reserve. Okay, so transfer to capital reserve. Now while passing the journal entry, only with respect to those shares which are being reissued, okay, should be transferred to capital reserve. The remaining shares which were not reissued, okay, the balance in share forfeited account should be untouched. Okay, so again in this particular case, the total amount to be transferred to capital reserve will be how much? 2 lakh shares into 65. Okay, so this would be how much? 130 lakh, right? So 130 lakh is the amount which has to be transferred to capital reserve. Okay, only this particular amount, okay, with respect to those shares which are reissued has to be transferred to capital reserve. You know the entry for this, right? So the entry for this would be share forfeited account debit 130 lakh to capital reserve. $130 lakh. Okay, so this would be the journal entry. Okay, if you just check out the solution, the last entry, look at this. So bank account debits, sorry, one second. So bank account debit 170 lakh, share forfeited account 30 lakh to share capital 200 lakh. Okay, and again when it comes to the amount which is transferred to capital reserve, look at the amount. Don't you think it is 130 lakh and 130 lakh? Don't you think we also got the same 130 lakh and 130 lakh? Clear? When only certain number of shares which were forfeited are being reissued, at that point of time, always follow this approach. Calculate per share how much is the amount which you already received, and out of this how much is the discount. Okay, utilize the extent of discount, whatever is the remaining amount, that is what will be transferred to capital reserve. Is this clear? I hope you guys understood this. Anybody having any doubt, any confusion? Clear? So with this we complete this illustration number 18. Let's take a small break. After the break we'll just move on to the subsequent illustration. Okay, let's take a break. Okay, so I hope there is no confusion pertaining to whatever aspect we have discussed so far. Okay, so let's just move on to the next illustration. Any doubt pertaining to this previous illustration? Illustration number 18. I hope everything is clear. Okay, so every adjustment has been mentioned in detail when it comes to our solution. Okay, you guys can just go through it. So let's just look into the next illustration, that is illustration number 19. Okay, let's have a look at it. Okay, so the question goes like this: give the journal entries for the following. They have given you different transactions. For these transactions, they are asking us to pass the journal entry. Very simple illustration. PK Limited forfeited 10,000 shares of rupees 10 each for non-payment of first call of 2 and final call of 3 rupees per share. Okay, these shares were reissued at a discount of 3.5 per share. So 10 rupees is the original issue. Okay, so they are forfeiting how many shares? 10,000 shares due to non-payment of first call and second and final call. It means the share was fully called up. So the shareholder may default at first call as well as second and final call. Okay, due to non-payment of first call and second and final call, the company is forfeiting these shares, and these shares are being reissued at what price? At 3.5 rupees per share. Okay. So KP Limited forfeited 20,000 equity shares of rupees 15 each, including 5 rupees of securities premium for non-payment of final call of 3 rupees per share. Out of these, 10,000 shares were reissued at a discount of 4 rupees per share. Okay, so KP Limited forfeited 15,000 equity shares of rupees 15 each, including 5 rupees premium for non-payment of allotment money 8, including securities premium, and first and final call money of 5 rupees per share. Out of these, 10,000 shares were reissued at 14. Okay, so that's all. For each and every category, we just need to pass the journal entry for forfeiture, reissue, and then whatever is the amount which we are supposed to transfer it to capital reserve, we just need to transfer it over there. Okay, So let's pass the journal entry for forfeiture. So let's take the first category, case 1. Okay, so 10 rupees was the issue price. Okay, so issue price per share was 10 rupees. Okay, so 10,000 shares are being forfeited due to non-payment of first call of 2 and final call of 3. Okay, so 10,000 shares are forfeited due to non-payment of first call money of rupees 2 and second and final call money of 3 rupees. Okay, 2 and clear? So first call money of 2 and second and final call money of 3. Now we need to pass the journal entry for forfeiture. First let us pass the forfeiture entry. Then we'll be talking about the reissue of these forfeited shares. Okay, so first let us pass the entry for forfeiture. So you know that, okay, so share capital account should be debited. Share capital account debit to the extent of called up value. In this case, the person failed to pay the first call as well as second and final call. It means the shares were fully called up. Okay, so share capital account debit 10,000 into 10. Okay, this would be 1 lakh. To share forfeited account to the extent of amount which is already been collected. So 10,000 into the amount which has already been collected. How much is the amount which has already been collected? So in this case, if you see, out of this particular 10 rupees, 2 rupees of first call and 3 rupees of second and final call was not received. It means 5 rupees has already been collected. So out of this 5 rupees, that is half of the amount, 50,000 rupees would have been collected. 2 calls in arrears. Okay, because even though the first call money was not received, they also made second and final call. Okay, they also called up the second and final call. It means the amount which was due at first call would have been transferred to calls in arrears. So that's why I'm giving effect to calls in arrears. So calls in arrears would be how much? So this would be like 10,000 shares into 5 rupees. Okay, so 2 rupees pertaining to first call, 3 rupees pertaining to second and final call. Put together it is 5 rupees. So this would be another 50,000. This would be the entry for forfeiture. Okay, let's just check out the solution. Share capital account debit 1 lakh. Calls in arrears account is credited 50,000. Share forfeited account is credited 50,000. Clear? This would be the entry for forfeiture. Now let's talk about the journal entry for reissue of these forfeited shares. Okay, so this would be the entry for reissue. So 10 rupees share are being reissued at what price? So in this particular case, 10 rupee share is being reissued at 3.5 rupees. Okay, sorry, 3.5 is the discount. So it would have been issued at 6.5. So bank account debit, did they reissue the entire shares? Okay, they have mentioned that these shares, it means entire 10,000 shares are reissued at 6.5. So 10,000 into 6.5, this would be 65,000. Okay, so bank account debit, share forfeited account debit, 10,000 into discount is how much? 3.5. So whatever is the discount amount that will be utilized from this particular share forfeited account. Okay, so discount account debit, so this would be like 35,000. To share capital account. So share capital account will be credited to the extent of nominal value. How much is the nominal value? Nominal value will be 10 rupees. Okay, so this would be 1 lakh. This is the entry for reissue. Now, don't you think the entire shares which were forfeited is being reissued? So entire 10,000 shares which were cancelled due to non-payment of first call and final call are being reissued. At that point of time, I can directly compare these two. The balance in the share forfeited account was how much? 50,000. Out of this 50,000, 35,000 rupees was the discount. Okay. So if I utilize this, what is the balance which I need to transfer to capital reserve? So transfer to capital reserve. Straight away I can compare these two figures. Okay, there was 50,000 which was available in this particular share forfeited account. 35,000 rupees was the discount. Okay, so 15,000 is what is left over. Okay, this logic you can apply only if all the shares which were forfeited are being reissued. Okay, so in this particular case, all the shares which are forfeited are being reissued. Therefore, I can use this logic and the entry will be share forfeited account debit 15,000 to capital reserve. Okay, and how did I get this 15,000? Very simple thing. Out of 50,000, if 35,000 rupees is the discount, okay, so the remaining amount is what will be transferred to capital reserve. Clear? So we are done with this particular first case. Okay, if we just check out the solution, the transfer entry for this particular capital reserve. Okay, look at this reissue entry. Bank account debit 65,000, forfeited share account debit 35,000 to share capital 1 lakh. Same entry we have also passed. Bank account debit 65, share forfeited discount of 35, and then share capital is credited to the extent of 1 lakh. Now the entry for this particular transfer to capital reserve, look at this, share forfeited account debit 15,000 to capital reserve 15,000. Don't you think we have also passed the same entry? We find over here. Is this clear? Hope this is clear. This was case 1. Okay, so let's talk about case 2. So let us understand what exactly happened in the second case. Okay, so let's have a look at this. KP Limited forfeited 20,000 equity shares of rupees 15 each. Okay, so including 5 rupees of premium. Okay, so for non-payment of what? For non-payment of final call money of 3 rupees per share. Okay, so out of this 10,000 shares were reissued at 4 rupees per share. Okay, only this final call money of 3 rupees was not collected. Okay, so therefore, this particular company forfeited the entire 20,000 shares. Out of these 20,000 shares, how many shares are being reissued? Only half of the number. Okay, that is only 10,000 shares are reissued at 4 rupees per share. Very simple example. If you guys would have understood, okay, the logic or the concept, all these stuff would be very simple for you guys. Okay, so KP Limited issued 10,000 shares, sorry, not 10,000, it is 20,000 of rupees 10, sorry, at 15, including premium of 5 rupees. Okay, so at 15, including premium of 5 rupees. Okay, so one of the shareholder who was holding these 20,000 shares, okay, so he failed. So these shares were forfeited due to what? Due to non-payment of final call money. Okay, so final call money of how much? So final call money of rupees 3. Okay, so out of this particular 15 rupees, see, premium is not included in final call. It would have been included in somewhere in the allotment stage. If nothing is mentioned, always assume that premium is included in the allotment stage. So I have already collected this allotment money. Okay, it means even the securities premium I would have collected. If premium is already been collected, should I worry about it? No, I need not worry about this particular securities premium. If premium is already been received, don't worry about it at all. Okay, now these shares were forfeited due to non-payment of this particular final call money of 3 rupees. Okay, so these shares were forfeited, and out of these shares, okay, so 10,000 shares were reissued at 4 rupees. I just need to pass the journal entry. Okay, so first let me pass the journal entry for forfeiture. Okay, so pay attention over here. As securities premium is already been collected, I need not worry about this particular premium. Okay, so the first entry would be like this: share capital account debit. Okay, share capital account debit to the extent of called up value. So 20,000 into, don't you think entire 10 rupees was called up? See, when I say premium, okay, don't consider the premium over here as it is already been collected. So share capital account debit to the extent of the nominal value or face value. 10 rupees is what is the face value over here. This would be 2 lakh. Securities premium, should I be giving effect? No. Okay, so to share forfeited account to the extent of the amount which is already been collected. Now out of 10 rupees share, don't you think only 3 rupees, that is final call, was not paid? That is why the share were forfeited. Okay, so it means that 7 rupees has already been collected. So on this 20,000 rupees, I would have already collected 7 rupees. Okay, so this would be how much? This would be 1,40,000 rupees. Okay, to what? To either share final call account or two calls in arrears. Okay, so however you want, you guys can just pass it. Okay, so two calls in arrears account. Okay, so this would be 20,000 shares into second and final call of 3 rupees was not paid. Okay, so this would be 60,000. This would be the entry for forfeiture. Simple. If you just have a look at the solution, look over here. Equity share capital account debit 2 lakh. 2 calls in arrears 60,000. 2 share forfeited 1,40,000. Don't you think we also got the same amount? 2 calls in arrears 60,000. 2 share forfeited account 1,40,000. Is this clear? So this is the entry for forfeiture. Now let's talk about the entry for reissue. First thing is, did the company reissue the entire shares which were forfeited? No. Okay, so out of these particular 20,000 shares which were forfeited, only 10,000 shares is being reissued. Okay, so first let us pass the reissue entry, and these shares were reissued at what price? 10,000 shares are being reissued at 4 rupees. Okay, so bank account debit 10,000 into 4, this is 40,000. To what? To share capital account. Is there any discount? Yes. Okay, so 10 rupees share are being reissued at 4 rupees. It means there's a discount of how much? 6 rupees. Okay, so that discount will get adjusted from share forfeited account. Okay, so share forfeited account debit, this would be 10,000 into 6 rupees is the discount. Okay, so maximum discount which we can allow is the amount which we had already collected. So in this case, we have already collected 7 rupee per share. Okay, so till 7 rupees we can give discount. The company had allowed a discount of 6 rupees. So this would be 60,000 to what? To share capital account, nominal value again, to share capital account 10,000 into 10. 1 lakh. This is the nominal account. Okay, so nominal value is 1 lakh. This is reissue. Now the entry for transfer to capital reserve. Be careful over here. Here only certain portion of the shares which are forfeited is being transferred. Okay, or is being reissued. Okay, at that point of time we should always be comparing the amount which we have already received per share with the discount. Okay, so amount already received per share. So per share, if you see, we have already collected how much? 4 rupees. Okay, so 4 is the amount which we have already collected, right? Not 4 rupees, 7 rupees was the amount which we had already collected. Okay, so less discount per share. Okay, so we are allowing a discount of how much? 6 rupees. 6 rupees is the amount which we are allowing as discount. So this is the amount which has to be transferred to capital reserve. Okay, so transfer to capital reserve shall be this 1 rupee. Okay, so the entry for this particular, okay, so transfer to capital reserve will be share forfeited account debit. How many shares were reissued? 10,000 into 1, this would be 10,000 to capital reserve. This would be the entry. Look at this. So second place, the entry for reissue, bank account debit 60,000, share forfeited account debit 40,000, to share capital account 1 lakh. This would be the entry. Okay, so same entry is what we have also passed. If you see with respect to reissue, bank account debit 40,000, share forfeited 60,000, to share capital 1 lakh. Now the amount which we are transferring it to capital reserve. Okay, so let's just have a look into it. 6 rupees was the discount, right? Yeah. How much was the reissue price with respect to the second case? Okay, these were reissued at 4 rupees per share, right? Okay, so this is the reissue price. Yeah, it is correct. No, reissued at a discount of 4 rupees. Read this carefully. What are they telling over here? Reissued at a discount of 4 rupees. So this 4 rupees is the discount amount. Okay, so 4 rupees is what is discount. Okay, so we just need to change. If we are allowing 4 rupees of discount, it means we would have collected 6 rupees over here. Okay, so reissue price is not 4 rupees is actually discount. So 10 rupees share, if I am reissuing it at a discount of 4 rupees, the issue price would be what? It would be 6 rupees. So here 4 rupees is the discount, so 3 rupees is what we need to transfer it to capital reserve. This would be the entry. 30,000 is the amount which we need to transfer. So what we had done is, we just considered as if the reissue price was 4 rupees. Okay, so reissue price is not 4 rupees. Look at this. They have clearly mentioned that it has been reissued at a discount of 4 rupees. Okay, so this particular stuff, read it carefully. 10,000 shares were reissued. It is not reissued at 4. Okay, reissued at discount of 4. Okay, so these particular shares are being reissued at a discount of 4 rupees. Okay, so this would be the reissue price. Okay, so reissue price will be how much? So it's like this. 10 rupee share, if I am giving a discount of 4 rupees, reissue price will be 6. Okay, so 6 rupees will be the reissue price over here. Is this clear? Okay, so now look at the entry. So the amount which has to be transferred to capital reserve, yes, it is how much? 30,000 and 30,000. Clear about the second case? So second case is clear for you guys, right? Let's have a look at this third category or third scenario. KP Limited forfeited 15,000 equity shares of rupees 15 each, including 5 rupees of securities premium for non-payment of allotment money 8, including the premium money, and first and final call money of 5 rupees per share. Out of these, 10,000 shares were reissued at 14 rupees. So here the reissue price, if you see, it is little high. Okay, it means the shares are reissued at premium. Okay, this is the last case, right? Okay, so first thing is, how many shares are being cancelled? 15,000 shares are being cancelled. Okay, the issue price was 15 rupees, including 5 rupees premium. Where is this premium included? This premium of 5 rupees is included in allotment stage. Okay, so it would be like this. Okay, so I'll just write it over here if you want. So issue price is 15 rupees. Out of this 15 rupees, if you see, there are 3 stages. Application stage, we don't know how much is it, but they have clearly mentioned that for non-payment of allotment money of 8 rupees, which includes the premium, and then first and final call money of 5. 8 plus 5 is how much? 13, right? So application stage would be 2 rupees. Okay, 2 rupees application, 8 rupees allotment, and finally this first and final call money of 5. Clear? Now out of this, they did not pay this particular allotment money and first and final call money. It means only application money is received. Okay, securities premium, which is included in the allotment, was it received? No. Okay, but while passing the allotment due entry, we would have given effect to securities premium. Therefore we need to be reversing that also as well. Okay, so the entry over here. Okay, so case 3, 15,000 shares issued at 15 rupees were forfeited due to non-payment of allotment money including premium of rupees 8 and final call money of rupees 5. Okay, so out of these 15,000 shares which are being forfeited, how many were reissued? Okay, so out of these 10,000 shares were reissued. Okay, so out of these 10,000 shares were reissued at what price? 14. Okay, so 10,000 shares were reissued at rupees 14. Okay, we just need to pass the journal entry. Okay, let us first pass the journal entry for forfeiture. Okay, so let's pass the journal entry for forfeiture. What will be the entry for forfeiture? The entry would be like this: share capital account debit. These shares were fully called up. Okay, so because the first and final call money was also not paid, right? So it means the shares were fully called up. Okay, 15,000 into 10. This would be how much? 1,50,000. Securities premium also was not collected. So securities premium also you need to debit it. So securities premium account debit. This would be how much? 15,000 into premium was 5 rupees. 10 rupees share has been issued at 15 rupees. It means premium is how much? It is 5 rupees. Okay. Now this would be how much? Yes. This would be 75,000 rupees, right? Correct. So this would be 75,000 rupees to what? To share forfeited account to the extent of amount which is already collected. So in this case, if you observe carefully, only application money of 2 is already been received. Okay, it means only 30,000 rupees is the amount which has already been collected. Okay, the remaining wouldn't be collected. So 2 calls in arrears, 15,000. Out of 15 rupees, if only 2 rupees is collected, it means 13 rupees wouldn't be collected. Okay, so this would be how much? This would be 1,95,000. This is how the journal entry for forfeiture would be. Okay, if you just have a look at the solution, let's just look into the entry which has been passed in your book. Share capital account debit 1,50,000, securities premium account debit 75. Look at this: share capital 1,50,000, securities premium 75, both are debited. 2 calls in arrears 1,95,000. Calls in arrears have written at the end 1,95,000. 2 share forfeited 30,000. Clear? So they have clearly mentioned that securities premium which is included at allotment, he may default at allotment. It means premium is not being received. Whenever premium is not being received, we need to be giving effect to securities premium. The reason is very simple. While passing the due entry for allotment money, we would have passed an entry like this: share allotment account debit to share capital to securities premium. We would have credited the securities premium. Now that it is not being received, we need to reverse it. Otherwise, my books of accounts will be showing securities premium of this amount. Okay, so 75,000, although it is not being received. So that's the reason we'll be reversing this particular securities premium when it is not collected. Okay, so this would be the entry. Now the next entry would be with respect to reissue. Okay, so they have clearly mentioned that out of these 15,000 shares, 10,000 shares are being reissued at 14. So the shares are not reissued at discount, they are actually reissued at premium. So the entry would be like this: bank account debit 10,000 into 14. Okay, so these shares are reissued at 14 rupees. So this would be 1,40,000. To share capital account to the extent of nominal value 10,000 into 10. Okay, so this would be 1 lakh. To securities premium account, how much would be the premium? So 10 rupees share, if I am issuing it at 14, 4 rupees would be premium. So this would be 40,000. So this is how the entry would be. Okay, this is the entry for reissue. And finally the entry for transfer to capital reserve. Okay, so transfer to capital reserve. Okay, let us pass the journal entry for transferring it to capital reserve. First thing what you need to check upon is whether all the shares, whatever is being forfeited. Okay, so is the entire number of share being reissued? No. In this case, out of 15,000, only 10,000 shares are being reissued. Okay, so at that point of time, amount already received per share. So per share, if you see how much is the amount which has already been received, we would have received, okay, so only the application money of 2. Okay, we would have received only application money of 2. Okay, so less discount, if any. In this case, okay, was there any discount on reissue? No, right? So there was no discount on reissue. Okay, was there any discount on reissue? No. The shares were actually reissued at premium. Okay, so this 2 rupees is what we need to transfer to capital reserve. Okay, 2 rupees per share is what we need to transfer to capital reserve. What would be the entry? The entry would be like this: share forfeited account debit 10,000 into 2, this would be 20,000. To capital reserve 20,000. Clear? This will be the entry. Okay, so if you just check out the solution, look at this. Bank account debit 1,40,000, to share capital 1,00,000, to securities premium 40,000. So look at the entry what we have passed. Don't you think it's the same? Securities premium is 40,000. Then the amount what we need to transfer to capital reserve. Okay, share forfeited account debit to capital reserve 20,000, 20,000. Share forfeited account debit to capital reserve 20,000 and 20,000. Is this clear? Hope everybody understood this. Anybody having any doubt, any confusion so far? Clear? So this is that just given 3 scenarios wherein they just asked us to pass the entry for forfeiture, reissue and then transfer to capital reserve, which we have done. Okay, so fine, then let's have a look at this next illustration, that is illustration number 20. I'll just read out this illustration for you guys. X Limited issued 10,000 equity shares of rupees 10 each at a premium of 2. Okay, so 2 rupees will be the securities premium, payable 3 rupees on application including premium of 1. So what is happening is premium is not collected in one stage. Okay, so part of the premium, 2 rupees is the total premium. Out of 2 rupees, 1 rupees is being collected at application stage. Allotment money we are collecting for including balance of premium. So this 4 rupees is including 1 rupee of premium, and that application money of 3 rupees is including 1 rupee of premium. Okay, and the balance in call. Okay, so public subscribed for 12,000 shares, excess application money was refunded. So clearly that 2,000 shareholders who applied in excess, we are just refunding it. One shareholder, Mr. A, okay, holding 50 shares, paid the call money along with allotment itself. So at the time of allotment itself, he is not only paying the allotment money, but he is also paying this call money. So will it be calls in arrears or will it be calls in advance? Yes. This particular person, at the time of allotment itself, he paid the allotment money as well as the first call money. So he is paying something in advance. So this would be treated as what? This would be treated as calls in advance. Another person, Mr. B, failed to pay the allotment money and call money on 30 shares. Okay, so these shares were forfeited after the call and 25 rupees of these shares were reissued at 9. Okay, pass the journal entries. Very simple question, guys. Okay, just go through this particular illustration. We'll be solving it now. Okay, so let's solve this illustration number 20. So what is happening over here? How much is the issue price? 10 rupee share is being issued at premium of 2 rupees. Okay, so issue price is 12 rupees. Clear? Only thing is the premium is not collected in one shot. Okay, so the premium is collected in 2 different stages. Out of this 2 rupees of premium, 1 rupee is being collected at application stage, 1 rupee is being collected at allotment stage. Okay, so application stage, we are collecting how much? 2 rupees. Okay, application to allotment. Now application it is like 3 rupees, right? Allotment it is 4. Okay, so application stage it is 3, allotment 4, and the balance will be collected at first and final call. So 5 rupees is what will be collected at first and final call. Now out of these 3 amount, I'll have to just make a breakup. How much is the amount relating to share capital and how much is the amount relating to securities premium. So out of this, securities premium will be 1 rupee and the balance will be the share capital. Share capital will be 2. Okay, so same way over here, if I want to do, securities premium will be 1 and then the share capital will be 3 rupees. Clear? Okay, so first entry with respect to application money received. Okay, so first entry will be with respect to application stage. Bank account debit, Can you guys tell me how much is the application money which is received over here? Although the company issued only 10,000 shares, public subscribed for 12,000 shares. Okay, so bank account debit 12,000 into 3 rupees is what we would have received. Okay, so 36,000 rupees is what we would have collected at application. So bank account debit to share application account 36,000. This would be the first entry. Now, out of this 36,000 rupees, how much is the amount which I am refunding it? How much is the amount which I am transferring it to share capital? Okay, so the next entry will be share application account debit 36,000. First, let me transfer the amount with respect to the capital. Okay, so to share capital. Here premium is also included, don't forget that point. Okay, so 10,000 into 2 rupees is what is the capital component. So 20,000 will be transferred to capital, 1 rupee will be transferred to securities premium. Okay, so 2 securities premium, this would be 10,000 into 1. Okay, so 10,000 into 1, this would be 10,000 to what? To bank account. So this would be with respect to refund. Okay, so 2,000 shareholders were refunded. Okay, so 2,000 rupees will be refunded. So no question about excess application money which is being adjusted towards allotment, because nothing was proportionately allotted. Okay, so no question about pro rata allotment over here. Whatever is the excess application of 2,000, that is getting rejected, and this excess application money is being refunded. Okay, so this would be the entry. Everything I've clubbed. Okay, if you see the total, sorry, this is not 1 rupee. Application money was 3 rupees, right? Application money was how much? 3 rupees. Okay, so 2,000 into 3, this would be like 6,000. Okay, just check out the total of debit and credit. It is same, right? 36 debit and 36,000 credit. Okay, so let's have a look at the journal entries which they have passed. Application money received. Okay, so bank account debit to share application 36. Don't you think we have also passed the same entry? Bank account debit to share application 36,000. This would be the entry. Then refund of excess application money 6,000 is what will be refunded. 2,000 shareholders applied in excess, so 2,000 into 3 rupees. Share application account debit to bank account. So what we have done is we have clubbed it. Share application to bank account 6,000. Okay, for these two parts they are passed a separate entry, but all the 3 transactions we have passed in single entry. Okay, so the next entry, if you see, share application account debit 30,000 to share capital 20,000 to securities premium 10,000. Okay, that is with respect to this part. Share application account debit to share capital 20,000 to securities premium 10,000. Is this clear? Okay, now after this, okay, so then comes the allotment stage. Allotment stage, the due entry is not going to change. Okay, here also if you see, 1 rupee of securities premium is included in allotment. Okay, so what will be the due entry? The due entry will be share allotment account debit 10,000 into, how much is the amount which I am supposed to collect at allotment? 4 rupees. Okay, so this would be 40,000 to what? To share capital account 10,000 into 3 rupees. So 3 rupees should go to capital and 1 rupee has to be transferred to securities premium. To securities premium, this would be 10,000 into 1 rupee. This would be the entry. Is this clear? So this is the entry, the due entry for allotment stage. Now, if you see over here, what did they mention? When it comes to actual receipt, there was some calls in advance. Okay, so receipt entry, be careful over here. Yeah, when it comes to receipt entry, okay, so read this carefully. What are they telling? One shareholder, Mr. A, holding 50 shares, paid the call money with allotment. So at the time of allotment money, he is also paying his first and final call money also. So he is paying some amount in advance. Okay, Another person, Mr. B, failed to pay the allotment money as well as call money on 30 shares. Okay, so these shares were forfeited. Okay, so let's not worry about forfeiture. So here we have got two shareholders. Okay, so one is Mr. A. Okay, so one is Mr. A. So look at this. Mr. A, if you see, there is calls in advance. With respect to how many shares? With respect to 50 shares. So 50 into the first and final call money he is paying. Okay, so how much is the call money? So we have written the breakup over here. Yeah, 5 rupees is paying in advance. So 50 into 5, that is 250 rupees would be his calls in advance. Okay, so another person, Mr. B. Okay, so Mr. B, who is holding how many shares? 30 shares. He did not pay this particular allotment money also. He did not pay this particular allotment money of 4. So this would be calls in arrears. This 120 rupees will be what? This would be calls in arrears. Clear? So later he did not pay this particular first call also, okay, of 5 rupees. So that would be another calls in arrears. Okay, now that we are passing the entry only pertaining to allotment, we'll just be concerned only till here. Okay, so look at this. Amount receivable at allotment. Okay, how much is the amount which we were supposed to collect at allotment? We were supposed to collect 10,000 shares into 4 rupees, that is including premium. We were supposed to collect 40,000. This is the amount for which we have passed this particular due entry. Okay, so less calls in arrears of Mr. B. Mr. B, who was holding 30 shares, he did not pay this particular 4 rupees. So there will be a calls in arrears of 120 rupees. Okay, I am also receiving some advance amount. Okay, so along with this allotment, one of the person, okay, so calls in advance of Mr. A. Okay, so Mr. A, who was holding 50 shares, he also paid this 4 rupees of first and final call at the time of allotment itself. So he would have paid 200 rupees in advance. So total money which I would have collected, okay, would be how much? It would be to the extent of 40,080. Okay, so look at the entry now. Bank account debit 40,080, calls in arrears account debit. What about calls in arrears? How much is it? Just check out this particular table. Okay, you guys will be able to see. So calls in arrears, I'll be debiting to the extent of 120 rupees. So 120 rupees is still in pending. 2 calls in advance. How much is calls in advance? Calls in advance, if you guys see, okay, so it is over here. Okay, so calls in advance was this 200 rupees. To share allotment account. Okay, so share allotment, if you see, 40,000 was pending, right? 40,000 rupees is the amount which was pending. This would be the receipt entry. Okay, if you just check out this particular solution, look at the due entry. Just a second. Yeah, just have a look at this due entry. Share allotment account debit 40,000, to share capital 30,000, to securities premium 10,000. Don't you think we have also written the same thing? Share allotment account debit 40,000, to share capital, to securities premium. Okay, 30,000 and 10,000. Then when we actually collect the amount, okay, so look at the amount which we actually collected. So calls in advance, they would have shown it separately over here. Look at this. Calls in advance, they have showed it separately. Just a second. Yeah, here it is. So bank account debit, just a minute. Okay guys, look at this. How much is the calls in advance which we wrote over here? It is 250, right? Correct? Because first and final call money was 5, but here we wrote it as 4. Okay, so I'll just change this. This would be 5. So technically 250 is the amount what we'll be receiving, okay, in advance. Okay, so this would be 40,130. Slight change, nothing else. So here we had considered the calls in advance as 4 rupees. It is not 4. Look at the first and final call money. First and final call, it is 5 rupees, right? Correct. So that's the reason it is 50 into 5, 250. Okay. So calls in advance, this would be 250 rupees. Okay. This would be the entry. Now in your book, if you see the journal entries, what they have done is, so for this particular portion they have passed the separate entry. Okay, so bank account debit, calls in arrears account debit to share allotment, they have passed the entry separately. Look at this, bank account debit 39,880. okay, now I have clubbed both the entries. So bank account debit 250, just add 39,880 and 250, how much do we get? 39,880 plus 250. Don't you think we are getting the same 40,130? I've just clubbed these two entries. Okay, I've just clubbed these two entries. Okay, so bank account debit 39,880 plus bank account debit 250. Okay, calls in arrears account debit 120. Don't you think here also we have debited calls in arrears 120? Correct? 2 calls in advance to share allotment account. Okay, so this is the mistake what they have done. Okay, so this is not calls in arrears. Okay, this should actually be calls in advance. Okay, so make this correction in your study material. This is calls in advance. Clear? So don't you think to the extent of 50 shareholders they are paying some amount in advance? How can it be calls in arrears? Okay, this is actually calls in advance. Okay, so 2 calls in advance, and again 2 equity share allotment 40,000. okay, 2 equity share allotment 40,000. what they have done is, for calls in advance they have passed separate entry, bank account debit 250, 2 calls in advance 250. Whereas for this particular calls in arrears and receipt of the allotment money, they have passed the entry separately. Even this entry is completely fine. Okay, and I have just clubbed and passed a single entry. Okay, then comes the call money stage. Now when it comes to this particular call money stage, so all we need to do is just pass the due entry first. Okay, so due entry will be what? See, even for this particular person, Mr. A, okay, so sorry, Mr. B, who made default at allotment stage, even first and final call was also made to him. Okay, he did not pay this allotment money as well as first and final call. If you just read out the question carefully, what have they told? Mr. B failed to pay the allotment money and first and final call money of on 30 shares. Okay, so even this first and final call was made with respect to Mr. B shares as well. Okay, so the entry would be like this: share first and final call account debit, okay, so share first and final call account debit with respect to entire shares. Okay, so entire 10,000 into 5 rupees is what is due at first and final call. Okay, so this would be 50,000 to share capital 50,000. Okay, so check out the due entry: share first and final call account debit to equity share capital account 50,000 50,000. Okay, now the next thing would be with respect to adjustment, okay, of this calls in advance. Okay, now when it comes to this particular receipt entry, just apply your common sense. Okay, just apply your common sense, follow the same approach. Okay, so amount receivable on second call. How much is the amount which is receivable? 50,000 is what is receivable. Okay, so less adjustment of calls in advance of A. Mr. A has already paid 250 rupees in advance. Will I be collecting that 250 again from him? No, right? Will not be collecting this 250 rupees again from him. Okay, so less calls in arrears of Mr. B. Okay, on second call. Mr. B did not pay. He was holding how many shares? I think Mr. B was holding 30 shares, right? So he did not pay this particular second call money also. Okay, so he did not pay this particular 150 rupees also. Okay, so this would be again calls in arrears. So the final amount what I'll be collecting will be 49,600. Is this clear? This is calls in advance which was made by Mr. A. Mr. A has already paid some amount in advance. He will not be again paying this particular amount to the company at the time of first and final call. Okay, and Mr. B, he not only failed to pay this allotment money but also failed to pay this particular first and final call. Okay, so the entry would be like this: bank account debit, we already have the calculation, 49,600 is what we'll be receiving. Okay, so calls in arrears, So calls in arrears account debit. Okay, so how much is the calls in arrears? With respect to B, okay, so it is 150 rupees. So calls in advance. So this particular money, whatever we had received in advance, now I'll be adjusting it. Okay, so there it was credited, now I'll be debiting. Okay, so calls in advance account debit. That was how much? 250, right? To share first and final call. The amount which is due at first and final call is how much? It is 50,000. Clear? So if you check out the total of debit and credit, it is 50,000. Let's just check out the entry which has been passed in your book. Bank account debit 49,600, calls in arrears account debit 150, calls in advance account debit 250, to equity share first and final call 50. Don't you think it's the same entry what we have also passed? Nothing would change. Okay, absolutely the same entry. Okay, now after this, okay, so what are they telling? In the question they mentioned that these shares are being forfeited. Okay, so B failed to pay the allotment money as well as call money. Okay, so 30 shares are being forfeited. Okay, out of these 30 shares which are forfeited, 25 shares are reissued at 9 rupees per share. Okay, so let's just pass the journal entry for forfeiture. So when it comes to forfeiture, all the shares which are held by Mr. B, okay, are being forfeited. So you know the entry, right? So share capital account debit. Okay, entirely it was called up. Okay, so 30 into 10. Okay, so completely this was called up. Okay, so 300 rupees was fully called up. Now check out whether securities premium is collected or not. In this case, securities premium is included in two stages, 1 rupee in case of application stage and 1 rupee in case of allotment. Okay, now he failed to pay the allotment money as well as first and final call money. Okay, so don't you think securities premium of 1 rupee is not been received yet? Because he may default at allotment stage, so we need to be reversing this securities premium of only 1 rupee which is included in application stage. It was already collected, so we are not bothered about it. Okay, so securities premium account debit 30 into 1 rupee. Okay, so this would be 30 to share forfeited account to the extent of amount which is already been received. Now in this case, if you see, can you tell me how much is the amount which is already been received? Only 1 rupee is been received. Okay, it would be like this. The issue price is 12 rupees, right? So out of this 12 rupees, how much is the amount which they have given pertaining to application? Just a second. How much is the amount pertaining to application? Look at this. Application, it is 3 rupees. Allotment, it is 4 rupees. And first and final call, it is 5 rupees. Okay. Out of this 3 rupees, again 1 rupee relating to securities premium, 3 rupees relating to capital. Okay, so this is premium, this is the capital. Again out of this 1 rupees relating to premium and then 3 rupees relating to capital. Sorry, this is 2, right? This is not 3, this is 2. Clear? Now this person who was holding 30 shares, he may default at allotment. Okay, so allotment and call money was not received. So even this premium is not received. But when it comes to this premium, it is already been received. When I say it is received, you need to ignore it completely. Okay, so you need to ignore it completely. When I say the amount which is already been received, you should be considering only this 2 rupees. Okay, so here if I want to pass the entry, look at this. When I want to pass the entry for forfeiture, I require the amount which has already been received. It would just be 2. That securities premium in the application stage, it has already been received. You need to ignore it completely. That is in the debit aspect as well as credit aspect. Okay, so this would be 60 2 calls in arrears to the extent of the amount which is yet to be received. Okay, so 30 into how much is the amount which is yet to be received? Here this securities premium is not received, so you need to be considering this. So effectively 4 rupees over here and 5 rupees over here. 9 rupees is the amount which is in arrears. Okay, so this would be how much? This would be 270. This would be the entry for forfeiture. Clear? Just check out the solution. Is it the same entry which they have also passed? Let's just look into it. Share capital account debit 300, securities premium account debit 30, calls in arrears 270, 2 share forfeited 60. Okay, so share capital account debit 300, here also it is 300, securities premium account debit 30, here also it is 30, calls in arrears 270. Okay, we have also written 270, and then share forfeited to the extent of amount which is already collected 60. Clear? Now out of these 30 shares, okay, so 25 shares is what has been reissued. At what price? 25 of these shares were reissued at 9 rupees each. Okay, so what will be the entry for reissue? So when it comes to the entry for reissue, it would be like this. Okay, so bank account debit, out of this 30 shares, only 25 shares are being reissued. Okay, these are reissued at 9 rupees. Okay, so 25 into 9, this would be 225. So bank account debit 225, forfeited share account debit or share forfeited account debit to the extent of discount. Okay, how much is discount? Discount is 1 rupee. So 10 rupee share, if I am issuing it at 9 rupee, it means 1 rupee is discount. Okay, so discount will be how much? 25 to share capital account 250. Clear? To share capital account 250. Let's just check out the entry which has been passed over here. Bank account debit 225, share forfeited account debit 25 to share capital account 250. Clear? This would be the entry. Okay, this is the entry for reissue. Now the transfer entry. Okay, so transfer to share forfeited account. Clear? Now first thing is look for the information. Okay, check out whether entire forfeited shares are being reissued or not. In this case, out of 30 shares, only 25 shares are being reissued. Part of the shares are being reissued. At that point of time, what you need to do is amount already received per share. How much is the amount which is already received per share? You guys can just refer to this particular share forfeited account. Here you will get to know. Okay, look at the forfeiture entry. Okay, so amount already received per share, if you guys see over here, it is clearly mentioned 2 rupees. This 2 rupees is the amount which is already received. Okay, so that is 2 rupees pertaining to application is the amount which is already received. Okay, so less discount on reissue. Now when it comes to discount on reissue, it is 1 rupee. Okay, so after adjustment of discount, how much is the amount which will be left over? 1 rupee. This is what has to be transferred to capital reserve. This 1 rupee per share is what we need to be transferring it to capital reserve. Okay, and what would be the entry? The entry will be share forfeited account debit. How many shares were reissued? 25. 25 into 1. Okay, so that would be 25 rupees. To what? To capital reserve. This would be the entry. Is this clear? Any doubt, any confusion? I hope you guys understood this. Clear? So this would be the entry. Anybody having any doubt, any confusion? Look at the last entry. Share forfeited account debit to capital reserve 25 and 25. I hope you all understood this. Yes, with this we complete this illustration number 20. Okay, so few more illustrations are left out. Okay, so before we discuss about this bonus issue and all, we have got one more illustration, I guess. Okay, so this would be the last illustration pertaining to issue of share forfeiture and reissue. Okay, so after completion of this illustration number 21, okay, so we have got something called as FPO. Okay, so follow on public offer and then right issue. Okay, theoretical part. Okay, so after that we have got another illustration pertaining to those stuff, that is right issue and FPOs. Okay, then we'll be discussing about this particular bonus issue. Okay, so far we are done with almost how many illustrations? 20 illustrations, right? So we are done with this 20 illustration. So by this time you guys should be having a proper knowledge with respect to at least the basic entries pertaining to issue of the shares, the entry pertaining to forfeiture, okay, the entry pertaining to reissue of these forfeited shares, and the last part, that is calculation, okay, of how much is the amount which has to be transferred to capital reserve. Okay, so you should be knowing how much is the amount which has to be transferred to capital reserve. Clear? So we'll stop over here. Okay, so the rest of the illustration we'll be discussing it in the next class. Okay, but make sure that you guys go through these particular 20 illustrations again. Okay, especially first understand the concept. Whatever we discussed, the concept will be available in this particular notes. Okay, this notes will be shared with you guys. So just go through this, and each and every illustration along with all the detailed working notes is readily available in this notes. Okay, only thing is, for the journal entries I have not passed the narration, okay, or I have not given the narration in the exam. Make sure that you guys mention the narration. Just mention simple thing: when you're collecting the application money, being receipt of application money, when you're transferring this application money to share capital, okay, so being transfer of share application money to share capital, when you're refunding the excess application money, being refund of excess application money, when you are adjusting the application money against allotment, being adjustment of excess application money towards allotment, okay, when allotment money is due, okay, so being allotment money due, okay, when you actually receive the allotment money, being receipt of allotment money, okay, same way, being first call money due, being receipt of first call money, okay, in case of forfeiture, being forfeiture of the shares, okay, just mention the statement like this, that would be more than sufficient. Okay, so being amount received at the time of reissue of the forfeited shares, okay, being transfer of the balance, okay, of share forfeiture to capital reserve. If you pass the narration in this manner, that would be more than sufficient. Okay, the examiner will not be reading the narration in detail, he just want the narration over there. Okay, but make sure that you guys mention the narration if they're asking the journal entries. Okay, so if you're not mentioning the narration, some portion of your marks will get deducted. Okay, so don't give that chance to the examiner, just mention the narration. Okay, so we'll stop over here. Make sure you guys go through these 20 illustrations once again. Further few illustrations which are left over will be discussed in the next class, and then we'll be starting with the subsequent part, that is right issue, bonus shares, and other parts relating to issue of shares. Okay, thank you so much guys.